Another 24 hours in crypto, and we see another double-digit loss for altcoins, and Bitcoin down again, getting very close to testing the 56K low. And as I'm filming this, plenty of alerts going off for cryptos that are breaking down from their support. And so if you find yourself in a position where you might be overexposed in your altcoin portfolio, or you're unsure what to do about your Bitcoin or ETH positions, this is the video for you. Don't go anywhere. Hit the like button, subscribe to the channel, help it out, let more people see the content here. It's your home of macro cycle analysis, covering Bitcoin, crypto, the stock markets, and the real estate cycle to help us get a better view of the markets, of the financial space. Now, in this video, I am going to go through Bitcoin and altcoins, ETH, Solana, and a couple of others there. Now, with this particular video, I am going to recap just on a couple of videos from 2 months ago, just so we can see where we are in this current position and then move forward from there. We need to look back to go forward. That's essentially what I do here on the channel, studying the past to hopefully, and as best as we can, give us a bit of insight to what might occur next. Remember, there are no guarantees in the market, which is why it's so important to have a risk management plan. And when the market's going down, it's probably the best. It's the time where you think about it the most. When it's going up and you're all in euphoria, like at the peaks here in March, no one thinks about it there. No one wants to sell out of their positions. So I just want to burn this into our minds early on in the video in case we get another in your jellies, top of the market feeling. Make sure you remember what these fear moments are like so that you can at least position yourself better in that next case. And I believe that there is still a chance of another case to the upside. We haven't broken major support. It might happen, it might not. But I want to share that with you in today's video, just looking at that particular analysis. All right, guys, that's the fear and greed. That's where we're at today. 29 on the crypto fear and greed index. It's finally working again. We have major fear in the market. You've got the orange coming up here. Yesterday was a golden fear, and last week was around the neutral. Now, what we've been covering is the likelihood, no guarantees, of course, but what I'm looking at anyway, is the likelihood of this being a market reset after such significant neutral to greed and extreme greed in the market for Bitcoin and crypto since the low. More in particular, Bitcoin since that bottom price there in June and then in November, where the market was grinding out of extreme fear into fear, yet the price went slightly lower. So this period now in the market seems, we don't have confirmation yet. We need to see what happens over the coming months, but this could be that market sentiment reset where you basically have a lot of people saying it's over, it's wrong, shouldn't have got in, the low's not in, it's about to go down to $30,000, that sort of stuff. And you're seeing a lot more fearful news come out and people talking about buying Bitcoin if it goes under 40. Now, I want to show you why that would be an absolutely terrible idea to be buying BTC under $40,000 at this stage of the cycle, obviously based purely on strength and weakness in the chart and what that would mean to the macro cycle should it get to that price. So heaps to get through in the video. Bitcoin 30% crash after halving, and I also had a couple of videos at the time, Bitcoin 53 crash after halving. Remember, this was in April, going back to the lows and then those slightly higher lows for altcoins when the market sentiment was still quite high. People were still maybe in some sort of disbelief that we could see a prolonged period underneath the old all-time high. Fellow subscribers of the channel, you remember this, of course. I saw the signal and said it's probably unlikely that Bitcoin is going to go to new all-time highs, or at least hold into new all-time highs. And we probably have a solid 4 to 6 months underneath that high all-time high price of 74,000. That has come true. That has worked out. We're just using the probabilities, and that signal was another fantastic signal, and that was our 3 days down. If you're unsure of that, stay tuned to the channel. Now, I want to come down to these sections after we check out what we were looking at in these last videos a few months ago, the possibility of this 30% crash. And we're not there yet. We're at 23% down. If 56K doesn't hold, then there is the possibility of it coming, of BTC price coming back to fill that price range. That is around 50 to 53,000. That's exactly what I was saying here. I'll just put the captions on so you can see it and you don't have to listen to me again. And in this video here, just looking at altcoins, strong versus weak cryptos. So how to avoid the losers and how to find those stronger coins. Finding stronger coins doesn't mean that the final low is in. It just means that they're not going to perform as bad as the weaker coins during any sort of correction. Now, that brings me to the next point, looking at correction guidelines. It's a guideline, not a rule. Bitcoin bull, in terms of corrections, somewhere around 30 to 50%. Like we saw in 2023, we've seen 20%, 22, 23%. So we haven't gone into the sort of 30 to 50, but again, it's a guideline. It's not a rule. Bitcoin bear markets, 70, 90%. We've seen that before. Maybe in future, when there's more people in the ecosystem, it doesn't crash as much as 70 to 90%. Maybe it ends up only doing 60s or 65s. We don't know. That's in the future. So for now, this is still what is happening on Bitcoin bear markets. That's going to be one big point to look at when we look at the correction for BTC and where a strength versus a weak correction would come in for BTC. Very important to note, at least the way I invest, and that's what I'm sharing with you here. Altcoins in a bull market, typically, from what we've seen, correct 70 to 90%. These are essentially just like penny stocks, just garbage coins for the ecosystem. If you think your altcoin's never going to go down 79%, think again. You can let me know in the comment section if you've ever found an altcoin that has never done a 70% correction. Let us know in the comment section. In an altcoin bear market, they basically do 80 to 99%, and most of these would probably be 100% if all of that liquidity could be released. But of course, it can't, because you might be holding some token and you just can't sell it because there's just no one buying it anymore. So 80 to 99%, 80 to 99%. So there's the guideline there. Multiple times I've talked about this. What should you do? Wait to buy the dip or buy the breakout. And so you have two different risk management strategies here. You buy higher, wait for that confirmation. Obviously, keep your stops if that helps you sleep at night. And buying the breakout is basically paying at a premium price to get into the market on further confirmation, whether it's a shorter term confirmation, a longer term, maybe looking at a weekly confirmation and knowing how to find those particular areas. That's something that we do in great detail at TIA Premium. Link to this in the top of the video description. We're extending the Independence Day, July 4th sale for another 24 hours. Obviously, the market's been pretty crazy over this last 24 hours. Link down there. You'll get an email within the next 12 hours with the discount code. So check that out, TIA Premium. Great detail to help you with your short-term trading, your long-term investing, and everything in between to get to those goals throughout these cycles. So that's the last couple of videos. That's what we're looking at for the halving. I had anticipated somewhere around there. It does take time, and I'm not going to say that I called it. There's no, definitely not, but I'm prepared for it. So I'm not calling for it, but just prepared for it just in case, because that would still leave Bitcoin in a stronger position here. It would still be in a relatively strong position, provided it didn't break down from the 50% levels. And those 50% levels from the run up, the major one here from the cycle low to the current cycle top, which is also the all-time high, that 50% through the middle comes out at 44,600. And you've got another 50% here, which is a shorter term time frame than the entire cycle. That's at 49,300. So if we just work with the major one here at 44.6, you've also got that 49, which was the monthly swing top in 2022. So some nice areas of previous resistance, and we're looking to that zone for potential support. Now, for macro bulls, you would not want to see this get broken and then monthly closes under that level. So that's where you need to write that down. Any closes under 44.6 is probably going to be getting very close to a curse. And that curse is basically prices under 40K. Now, we saw some headlines of major people, Portnoy, I think, was one of them, saying that he'll buy Bitcoin if it goes under 40. If he buys Bitcoin when it goes under 40, if you get closes under there, longer term closes, like your longer term timeframes, the trend is basically broken. That's it. Game over. And if it goes to 40 and closes under there, not a guarantee, but a much higher probability that this cycle is over and is going to go lower. It'll go down and test the 30s and test the 20s. I'm not trying to spread any sort of FUD or anything like that. Relax, keep your pants on, hold the keyboard back just for a moment so that you're not trying to get into that. Just concentrate on what's here. This doesn't mean it has to happen. We're just looking at pivot points on the grand scale. The grand scale, they are the areas there. So any sort of corrections into this zone, at least for my analysis and what I'm comfortable with, into this sort of low to mid 50s is still above my bull market support. Therefore, it still has a chance to continue higher. It would just mean the grind out might take a little longer than what we had originally anticipated, being 4 to 6 months. Again, I'll remind you that at that time, that was highly not popular. Unpopular, there's the word. It was extremely unpopular to say that the market was going to be down for potentially 4 to 6 months. We covered some of the short time frames and it just didn't make it. And so then we had to go out to the median time frame there, which was 4 to 6 months. It was extremely unpopular at the time. And now I don't think you would find anyone to say that it's not going to make it to 4 months underneath the old all-time high, considering it's only a week out from that now, being nearly 4 months down from the all-time high. So this is where we find ourselves. I've given you the bull market support, and this is the support area using the 50% levels. So there is the two significant levels, one being above the bull market support, one being below it and potentially a curse. So this would be your opportunity, or anywhere in here actually, it could be the opportunity of a lifetime, but there's always a but because you don't know if it's going to hold up, then it could potentially turn into a curse. That's why I always come back to what type of trader are you? Are you looking to buy the dip or are you looking to buy the breakout? So really need to understand what type of trader you are when it comes to buying the dip or the breakout. Each of them have their pros and cons. Pro to the dip, you get a cheaper price. The con, it could go further. The pro to the buy the breakout is that you got confirmation that you're with the trend, and that might be up or it might be down depending on which way you're going. You're with the trend. The con, it's a higher price, therefore slightly lower reward. But at the end of the day, up to you. Okay, so that's a look at Bitcoin. We've got a little more to get through that with that and cryptos as well. Fear and greed, as I said, is at 29. Etch this one into your memories, or at least into your emotional bank accounts, trader psychology for the markets. It's exactly what I do, just so you can get a feel of where we are in the cycles themselves. This was a good point that Michael made 2 months ago. Everyone's going to buy the dip too early. And looking at the emotion of the market, it seems like that could potentially be the case at the moment. Now, this one's always a tough one to come to grips with because it is the emotions of the trader, and no one likes to feel like shit when their accounts are going down. If we can somehow put the emotions to the side and understand what we're seeing right now in the market, what we're seeing on the feeds, what we're seeing with the emotions as well, and relating that to where the price is at, maybe this is an opportunity that we would see some sort of low forming. I don't know where the exact price is going to be. I don't know the exact timing. Of course, that would be knowing the exact future, and I don't claim to do that. But some of these signs happen around lows or the base of a low forming. For example, we saw in March 2023, we saw in June and November of 2022, there were two different lows spanned over the course of 5 months, June and November, 17.5 and 15.5, but it was the same sort of feeling there. So keep that in mind going forward. Write it down, do what you need to do with it, but I think we'll probably see these sorts of things again. And I've made another comment to this. My feed on X was basically filled with a lot of cope, people trying to cope with the correction here, charts and all this sort of stuff, and then also crypto fear. So I didn't really see an in-between. And I think the market sentiment is in full reset mode, as I've been trying to point out here with the crypto fear and greed index. You know, we see these pretty significant drop-offs. Maybe we got to dump a little further. I honestly don't know, but I think it's working towards something like that. And typically it takes that bit of time. Why is this happening? So many reasons. One of the major ones I see, of course, is Mt. Gox doom days, and the investors are selling off their BTC or BCH. Some analysts are suggesting that it's more of a bearish case for Bitcoin Cash as opposed to Bitcoin itself. As per the analysis here, for BCH, about 24% of the daily trading volume versus 6% for BTC. So not as bad of an issue for Bitcoin versus Bitcoin Cash. Therefore, they're trying to play it down a little bit here. The stock market's obviously a holiday, so it's going to be relatively short. They're in fear, yet they're in new all-time highs. And I think this is probably a great point for all of us here. Bitcoin, maybe some cryptos, but more importantly, the stock markets and the real estate cycle as well. It does not pay to be fearful in a bull market. I mean, that's something that I thought of at this time because it really is that simple. It doesn't pay to be fearful in a bull market. 19th of April to the current all-time high, which was now 12 to 13%. There's the 19th of April fear to now still in fear. A little bit of neutral feelings here for the fear and greed here, S&P, but essentially basically fear that entire time while the market was climbing. That's been the last couple of months. So that's what I think. It does not pay to be fearful in a bull market, and probably closer to the point in a macro bull market. Missed out on a lot of gains to the upside being fearful in a macro bull market. Interest rates are coming up. The next meeting looks like a pause. What we've been talking about now for 7 months, I don't think we're going to see significant cuts. I thought potentially we're going to see some increases. Nonetheless, my view from the beginning of the year, which was against 80 to 90% of people, I did not think we would see very significant cuts, if a cut at all. And essentially that's what we're at now. I think a lot of people are still hoping for a cut in September. We'll have to wait and see how that plays out over the coming months. But as we can see now, it does not look like a cut for July. And for the Aussies as well, doesn't look like we're going to get any cuts here over the next couple of months, maybe even an increase. And we can see that the cycle is still continuing on when we look at the broader landscape here with the real estate market and stock market. Prices are still going up. And as I pointed out in yesterday's video, I think it's a matter of time until some more of this money will flow back into Bitcoin and crypto. Right now, the spotlight seems to be on real estate, as we had looked at, because of the 18.6-year cycle. We're into this final stage, the winner's curse. Everything keeps going up. And this is exactly the winner's curse here. The median nominal gain for Australians here was $265,000 in the quarter, and the total nominal resale profit was $28.5 billion. So that's the lot there that happened in quarter one. So they analyzed 85,000 dwelling resales, and it's similar for the major cities in the US as well. You're seeing these prices continue up. In Australia, we had 16 or 17, maybe even 19 consecutive months of gains. We have the Case-Shiller home price index is also up now since the low here in early 2023. Up a few slight corrections there of barely 0.5%, and now it's up again to new all-time highs. United States Case-Shiller home price index. Check it out on your charts yourself if you want to see how this cycle continues on to new all-time highs. Maybe your particular area, suburb, bumfucker nowhere town is not going up. That is definitely the case. Same thing here. Hobart's not going up. Melbourne inner city units aren't going up. It's because they're too screwed. They've got too much stock, or in the case of other areas, people don't want to move there. Okay, we're not talking about those little towns. This is the broad landscape of the overall cycle. Know your towns, know where you're at, and you'll do a lot better understanding how the cycle works. So the winner's curse of the cycle, everyone's making profits now. And I say everyone, I mean 94% that are selling are profit-making sales. Not my opinion anymore. It's a fact. That's 94 out of 100 sales are making money. That just breeds more and more greed, as we see with Bitcoin. Everyone's in these profits and they're all going up, and cryptos, they all keep going up. And then eventually it all comes to an end. But real estate takes longer to play out than, of course, Bitcoin and cryptos, right? Okay, the last one here, prospect of strong capital gains is luring investors back into the market. So we're getting more participants and supported by strong rental price growth that maintains healthy rental yields. It's the same mindset, the same psychology that I think will come back to Bitcoin and cryptocurrencies over the course of 2024, 2025. They'll start to see the gains, and then they all start running back at the same time as the price pushes to new all-time highs. And that seems like what we're going through now to recover from. You can see that this was basically the area of the euphoria. I showed you that in the intro. That peak euphoria, we had extreme greed. Here's the chart. Extreme greed was coming through late February into March, into those peaks, and then it started to die from there with the lower top forming, right? And so that was this area here. And typically what you see with cryptos, especially altcoins, cryptos, right, is that the price action comes all the way back to clear out any of that exuberance. And so I wouldn't see that as a bad thing if we were to clear out this sort of price action going back to 52K and the top there's around 60, and we're already sort of in the midst of that now. Doesn't mean it has to be over, but that's typically what happens on a lot of these charts. It comes back to take out any of the big green dildo bars, the stuff that goes straight up. Essentially, it wouldn't be unsurprising to see that occur. Pricing for Bitcoin to the downside, obviously 56 is there, 54, and then the little zone here between 50 and 53. Plenty of areas of support to the downside, but if it starts to break, you can see that there isn't much support because of these large green dildo bars to the upside. Probably needs to refill some of that and hopefully form a base to get back to our price chart here, or this timing belt where we're looking at some sort of move into new fresh prices around that sort of 4 to 6 month period. So this is from the March signal, looking towards July through to September for some sort of price action there. Okay, on to ETH and Solana and some of the, one of the cryptos not doing so well, so stuff to avoid in case of the curse. Ethereum in this case still got some higher lows forming here. Yes, there's a lot of fear in the market. Sitting at 31, this is not a great area for ETH to be in. Above 32 would be a much better place for it. So 3 days to go until the end of the week. If it can climb higher, that's going to be much healthier for the price of ETH. Otherwise, you'd be looking towards 28 and then back to the 50% zone at 25 up to $2,800. That's the full 50%. And that's why I've got this zone here as the potential next area should it break down from 28. That would still be relatively strong. Well, it is strong. It's in the strong half of the major 50% tool, but breaks under that level are going to get rather precarious for the price moving forward. The corrections, it's only 31% to the low, and then to the 50% is at 39, call it around 40%. And we know from this cycle, ETH has done 28, it's done, 28 to 29% in those major corrections there. And throughout this entire correction is 47. But that is the bounce from the low and then the higher low forming. So it has done these 30% before. It's done another 30% just over the last couple of months. To these lows could be the bigger one around that sort of 40%. So keep an eye out for that as well. But still putting in those higher lows along the way throughout this journey of the macro bull. Solana, the worst news for Solana is that it broke down from 137, so that's the bear market range. But in terms of the bull market range, out of the low of $8, that's it. The 50% level's back at 109. So now it's in not necessarily a no man's land, it's just in a tricky situation, rock in a hard place, if you will, because it's still above the bull market move, but it's now below the bear market move. So you've got the big move to the downside there, the halfway point. Ideally, needs to be back above 138 on a closing basis towards the end of July, basically the close for July. So let's look out for that as we get closer to the end of the month, which is still several weeks away. So there's still time for that. For corrections, 43%, still above those lows, still above the lows at $99, and also above the ETF correction low back in January, which was around $79. To that low, that would give you a 62% correction. So if we look back to the guidelines here, altcoin bull market, a 70 to 90% would be typical. Solana's done that in the past. It did 80% back in 2020 before it took off from $1 to $260, which is what got all the hype there. So a 60% correction takes it back to the $79, $80 low. And then back to this zone is roughly your 70 to 80% move back down to those lows at 46. Now, the first thing people always say is, you're calling for that. No chance in hell am I calling for it. I'm just offering the analysis, looking at the corrections, and something that would still maintain a bullish stance, but much, much weaker than where it currently sits. Ideally, you don't want it to go below 79 bucks, being that ETF low, right? That's what you're looking at. Spikes down are okay, but you don't want to see major closes under those levels. That is what I'll be looking out for all of my strong altcoins. I don't want to see them go below significant higher lows, and hopefully above some of the 50% levels, but it's not as important because we know that altcoins can correct around 70 to 90% from those tops, and the 50% levels are basically halfway through that price range. Okay, now onto something that you don't want, and it's an easy swing at XRP, because when the market's strong, XRP is weak. When the market's weak, XRP is even weaker. This is the sort of crap that you don't want to be on. And if this is part of your altcoins and they're breaking down into the previous consolidation zones of late 2023 before the big breakout, probably want to rotate out of those cryptos. XRP, absolute hunk of junk that is going nowhere fast. Now, I've given it enough crap here. We can move on from that and have a look at some other weaker stuff. And you know exactly where I'm going here. Yep. Let's have a look at ADA. It has been breaking down into that zone for quite some time, which is the consolidation before it broke out and it's back into that zone. So what this is saying to me is that investors or traders aren't seeing value in this token. Maybe they see value in Charles as a nice guy. I don't know. But they're not seeing value in the work that's going on there at the moment. That's the price chart saying that, not my opinion. The price chart does not see value in it. They see value in it at 34 cents, which is the same value they saw in July, the same value they saw in November 2022 when FTX collapsed. That is telling you something. So you choose to listen or don't listen. Entirely up to you. I've looked at a lot of the worst case scenarios. The best case scenarios are that we see a reversal on Bitcoin. Even if it breaks down into that mid $50,000 area, you want to see some higher closes, at least on the weekly chart here over the next sort of 3 days, back above roughly $59,000. Now, Michael's gone into this in great detail on his channel, so make sure you go and follow his channel. Check out that link in the top of the video description for TIA Premium. And question for you, pinned comment, is this going to end up being a curse breaking down below 40K, or is this an opportunity of a lifetime? No one knows. It's just interesting to see where our heads are at a time when the fear is crushing here at 29. All right, guys, have a fantastic weekend. I'll see you from Indonesia next week. Take care and peace out.